Good morning. And what a great morning to celebrate opportunity. What a great morning to celebrate economic inclusion. And it's a great morning to rethink. Thank you so much, everyone, for being here. We're so excited about this panel, so excited to have a little bit of fun. I'm excited to see so many familiar faces, faces that I recognize from my days when I started in the CDFI world as a community development banker in the outer boroughs of New York, back when there were no hipsters there. I recognize a bunch of faces from 8 years working for a CDFI, where we made loans to small CDFIs like People Fund in Austin, Texas, doing local work, and to big, large national CDFIs like LIFT and Self-Help Credit Union. And I recognize faces from my time in the first Clinton administration, where I worked on the New Markets Tax Credit Program. It's great to be back home. And while it's wonderful to see so many familiar faces, what I am most thrilled about being here today is how many unfamiliar, how many new faces there are in the crowd. It is so exciting to come here, see so many new faces, and realize and know for sure that the CDFI movement is alive and well. And to Priscilla's point, it's also great to see the familiar faces of bankers who have been investing in CDFIs long before the term impact investing was coined. But just like affordable developers or affordable housing developers have learned to coexist and to leverage the presence of hipsters in places like Bed-Stuy and Fort Greene, Brooklyn, it is time for CDFIs to navigate new sources of capital and new relationships while still preserving partnerships with long-standing sources of capital. As Sam Cooke famously said, "It's been a long time coming, but I know a change is coming." Oh, yes, it will. I'm honored to share the stage today with three incredibly accomplished women who have promised, and you guys did promise, to be provocative in their comments. So we hope after this session that you will have lots to talk about. To my far left is Cynthia Muller from Kellogg Foundation. Next to her is Melissa Bradley from the Kogod School of Business at American University. And next to her is Kat Berman from CNote program. Their bios are all in your online conference app, so I will only briefly say that what is so great about each of them is that they have a connection to the CDFI sector. Cynthia, from her time at Capital Impact Partners, oh, I was expecting the Capital Impact Partner people to cheer. So Melissa, from her time leading the White House Social Innovation Fund, and Kat from her days at Global Brigade. This morning, we are here to talk about impact investing and beyond. Throughout this conference, you'll have many opportunities to talk about the work that you do in rural and urban communities all around the country. And as CDFIs, you spend much of your time thinking about how to provide access to capital for those who traditionally have not had that access. But this morning, for the next 45 minutes, I hope, not 36, that our focus will be on how CDFIs can access capital from impact investors and other investors who have not traditionally invested in CDFIs. We are going to talk about growing sources of capital like family offices, which is the type of organization that I work for, and we have been an investor in a US-based CDFI. We're going to talk about private equity firms, high net worth individuals, asset management firms, and impact fund of funds. We want this morning's panel to be a conversation as much as possible, a conversation that includes you, and I promise that we will save time for questions from the floor, as well as questions from the online app. So let's get started. I want to start with a question to Cynthia. You know, people do sometimes talk about impact investing as if it's new. And in fact, we know that the work that generates impact in our communities is nothing new. And the investors that support it have been longstanding, even those who now call themselves impact investors. So examples often help to really make it concrete. And I'm hoping that this morning you can share an example of a successful impact investing partnership.
Yeah, I mean, thank you, Lisa, and I'm so pleased to be here today. I think this is the one thing that frustrates me the most about impact investing is that folks are coining it as new. It's really, the term is new. The practice has been around since, how old are all of you in the CDFI space? 40 years old. It's been around for a while. And in my previous to joining Kellogg, I worked with a consulting shop that was working with high net worth individuals and foundations around impact investing. And through my experience with capital impact partners, I always turn to CDFIs first, especially for new investors to the space. And so we've had families, very small families, who are focused in education that were wanting to make investments in place. And we would turn to CDFIs to look for those opportunities. In fact, one of my last transactions before I left Arabella this summer was a family of 3 siblings that wanted to focus on early childhood education. And they were making about a $500,000, $750,000 PRI. And in our role as an advisor, we were looking for opportunities where the capital would be able to be easily absorbed, where there was a lot of appetite to kind of learn from using this investment in early childhood education, like facilities and programs, and where this was actually going to help to catalyze other investors for this CDFI. And so for this particular transaction, which I would love to share, but I'm not allowed to, but for this particular organization, they came to us and said, here's what we've done in the space, here are our challenges, and here's how we think we're going to be able to partner with this particular family. And so they were really prepared. And then I've had other transactions where folks actually have turned us down, which I actually love when people say that, because they're like, we don't need your capital here, this is what we're doing. But I think for families that are making, or families or foundations that are looking for sectorally focused transaction as well as place-based transactions, I think CDFIs are well positioned for that.
So the next question, kind of building on that, is around messaging. And how do we tell the CDFI story to impact investors and other non-traditional investors who maybe aren't as familiar with the work of CDFIs? And the question is for Melissa and for Kat. You could choose which goes first.
So I think a couple of things. One, when you think about an investor, what do they look for? They look for a track record, they look for experience or some kind of expertise, and they look for some kind of longevity in the space. And when you think about, speaking of history, in 1968 is when Ford started doing PRIs, CRA came in the late 70s, and in 1994, CDFIs came into existence. So you're not going to get a better track record of investment experience than that. When you think about experience and credibility, I think that Cynthia touched upon, I think there's a set of skills that CDFIs have, and it's really about packaging and framing. One, you probably are best positioned from a domain expertise perspective, both in terms of what is happening in the local economy, also from a place-based perspective. Two, your infrastructure is already built. And when you think about the role of transaction costs, when pension funds are trying to move billions of dollars, oftentimes they're held back because they can't find someone who actually absorbed that type of capital. The beauty of an individual institution that may be a large CDFI or the combination of regionally focused small CDFIs have the capacity to be able to retain that. And then certainly the expertise is there. There's areas of technical expertise, financial expertise, longevity and portfolio management. So I think it's really thinking about, I teach over 250 kids a year, and I say it's all about how you package yourself to a potential employer. And I think too often, for me, the biggest thing is that you all, who've been doing amazing work, have not had the opportunity to sit back and think, how do we rethink, and more importantly, how do we reframe? The other piece is think of yourselves not just as service providers who are really embedded in the community, but how can you be distribution channels for large asset managers who are trying to push money down and who don't have the time, the energy, or the capacity to rebuild the infrastructure and the wisdom that you already have. So I have tremendous optimism around what is the opportunity for CDFIs, and have worked with many family foundations who didn't even know that that was an option. And so I think the other piece is thinking about all the types of deals that you've done and how they overlap with the variety of asset owners that you've talked about, of how you can be beneficial to family offices, how you can be beneficial to large asset managers, and most importantly, how you can use those dollars to be beneficial to the communities when you think about scale. I did have the opportunity to meet with the CDFI in DC and talk about how can we do a partnership and possible investment, and their response to me was, no, we have enough money, don't worry about it. Well, one, this is not a great problem to have, but two, do you really, right? And how do you really think outside the box of leveraging new capital to be innovative and think about how can you scale and grow your internal operations, but also think about new tools and techniques that you can bring to the community.
And to kind of speak to that point, so I'm going to bring a different frame, which is really focused on the retail investor, because the question my team at CNote posed was, how do we open up this industry to everybody? 95% of people I interviewed, and we interviewed hundreds of individuals, retail investors, had never heard of the CDFI industry, which was shocking and frustrating to me. And so how do we really expand that visibility of the CDFI industry, the amazing work you're doing, and the incredible community members benefited from it? And so just to provide some context, so CNote is a social enterprise that is driving new capital to CDFIs through a high-yield savings vehicle. So a very different approach to how we drive new capital into this industry. And so in our market research to figure out if this could even work, we found out two interesting facts about messaging. We came to the table interviewing folks, talking all about CDFIs and all about impact. And the two biggest challenges we found in doing that is number one, inertia, and number two, what we call the cheap, easy now frame, right? And so this probably is not shocking to anyone here, but number one, inertia. When we were presenting a new financial vehicle, the first thing you need to do is really solve a pain point to move people out of their seat. And oftentimes the emotional appeal that we would come to the table with from impact investing was actually not enough. Sadly, to our chagrin, but truly it was not enough to get them to move assets. So then the second hurdle, which is they wanted a vehicle that was cheap and easy and now, right, meant that we had to rethink about the way we were packaging this vehicle to make sure that at the absolute most important factor that we're putting CDFIs in a good financial position and providing the type of capital they need when they need it, but also providing the access to this financial vehicle that made sense for this retail investor. So it's been a really interesting process, discovery process, but I think for us, what it taught us is we started coming from a place not of, hey, here's what we have, would you like it, to more of, I get what you need, here it is. And so really it required us to take a new feeling of empathy and pain points to really get to those retail investors.
So before we go to the next question, we're throwing out a lot of terms, and I think many people are familiar with the terms that have come up, like PRIs for program-related investments, and many of you also know what family offices are. But for those of you who are new to the players or the folks who consider themselves impact investors, I would refer you to a couple of resources. So one, the Case Foundation has a great guide to impact investing, which really speaks to a lot of these terms, MDIs and MRIs, and it's really alphabet soup, and I've found that to be a really terrific guide to impact investing, and you can find it on the Case Foundation website. Also, OFN has published a paper called the CDFI Futures, which speaks to some of what we're talking about today, and I would encourage folks to take a read on that as well. So my next question, which is really for the whole panel, starting with Cynthia, is, impact investing an area where everyone should be working to do their own outreach and to figure out how to apply the instruments and the infrastructure to each CDFI individually? Or is this a space where we should really be thinking about partnerships and collaborations? Or is impact investing only for big CDFIs, not for the smaller ones?
No, I think that impact investing is applicable to at all levels. So what we've seen is we've seen a number of large institutional foundations who've been really seeding this space. I think MacArthur Foundation has done obviously a tremendous job in the affordable housing space, and Kresge and Robert Johnson and others who are helping to support kind of a lot of this infrastructure building. what's happening is that we have a lot of the individual and smaller staffed foundations and family offices who are coming in, and they have as much resources as some of these other foundations, but yet don't have the capacity. And this is why on-ramps to investment are so critical. So one of the things that I know we at Kellogg and others in the philanthropic space are really grappling with is how do we help to build out this infrastructure so that the larger CDFIs in the space are continue to innovate and helping to scale, but also encouraging locally focused CDFIs to engage with local funders or other developers within their region. And so I think we're at this kind of initial conversations with groups. But one of the things that's come up quite frequently for us at Kellogg is because we do have places, we work in New Orleans, Mississippi, Michigan, and in Mexico, not places that have like a lot of infrastructure. And one of the challenges we have is finding local CDFIs. And so what we've done and experimented with is partnering local CDFIs with larger national players. And I think we've learned a lot, and I think there's a lot of best practices to be shared. And I think that's a really great pathway for folks to start to engage and also to help to create some infrastructure that makes sense for all players across the space.
I would agree. I think, you know, a lot of it's going to depend on what is the desire of the investor who's putting the money in and what are the desired outcomes and outputs. I think that when you think about the diversity of asset owners from multi-billion-dollar pension funds to small family offices, the range of dollars provides an opportunity for really small or community-based CDFIs to absorb a couple of $1 million, but may not make sense for them to go after a multi-billion-dollar investment. So I think just like any other portfolio approach, thinking about where is it most appropriate based on the desired outcomes and outputs. If there's a focus on affordable housing and there's someone that has that expertise, when we think about the statistics that show the folks who are starting businesses the most are African American women, where there's a CDFI that has a level of cultural competency and level of integrity in that space and brand value, then they should certainly be able to step up and absorb that kind of capital. So I think it's going to be less around structurally what are the various variations you have to have in terms of we have to have a joint venture, et cetera. But I think it is important that as those who sit in communities, how do I best serve that community? And to think outside the box that, well, I've carved off, I live in DC, I've carved off Ward 7 and 8, I've carved off Ward 1 and 4. The reality is, how do you actually serve the entire community? And I think that's significant because data shows that much more activity is happening at the city level, not the states. If you think about the Northeast Corridor from Boston to DC, and you also throw in Greater Los Angeles, that represents 1/3 of the US GDP. And so the power is definitely coming down to communities. And to me, that's where the value proposition, the competitive advantage of CDFIs sit. And so it's going to be less around what do I get and what do I get, to your point, but how do I really create a patchwork, a network to be able to absorb the capital and actually focus on distributing and building up the local economies. I do think you have to be mindful, though, of what is your capacity and what are you good at. When I think about all the institutions here, and I was happy to see some familiar faces, some of you are really good at one thing and the other. And so it does also require to take a step back and say, this is not about me and my institution, but this is really about the community. And I think that that's where you'll find that I think many people have a misunderstanding. Most impact investors, that's what they care about, right? They care about the community. They recognize that there are too high of a cost, lack of capacity, lack of understanding, lack of engagement, and that's what they're looking for in a partner. Not who's the biggest or the best, but who can actually provide them with the financial and social returns that they're intended at the onset.
Yeah, I think that is such a genius statement, and I just want to share, I think my operating assumption is to get us there is you need to be empowered with the type of flexible capital that allows you to make those decisions, to really observe, these are my strengths, these are not my strengths, and here's how we want to work with other CDFIs and other community partners to put forth our strength and really be the type of organization that's going to best serve this community. And so that's another, I mean, to us, that's why we really are advocates of having some of that flexible capital. The type, you know, what we're hoping to drive to CDFIs through CNote is absolutely this type of less restricted, flexible innovation capital to allow CDFIs to make those decisions that only you, running that organization, can make. And I think in answer to your question, Lisa, it's absolutely about the rising tide, you know, carrying all players, not just the largest CDFIs. I think there's so much we can learn from the largest and truly high-performing CDFIs. And at the same time, I think there's opportunity to make sure that all of us see this next wave of innovation together. And so that's really what I'd love to see.
So we're going to shortly open it up to questions from the floor. So we have a full 20 minutes for a conversation with you. So we're looking forward to that conversation as dialogue with folks in the room. And there's a mic in the center, and we're also going to take questions online, so you can send questions to the app. But as I was sitting here listening to the panel, it struck me that there are really 4 C's that we're talking about. And it did not escape me that that would appeal to the lenders in the room, 4 C's. But really there are. We're talking about collaboration, right, is working together and playing to our strengths. We're talking about coordination so that we are skating to where the puck is going, not to where it is, right? Coordinating as an industry and with each other. And we're talking about creativity, right? Is thinking outside of the box and really looking at examples of what's been done to try to think about, so how can we do this differently with both long-standing partners as well as new partners? And then the last thing, which I think is the most important C, is what Melissa and Kat touched on, community, right? Is that impact investors, the definition, the very definition of impact investing is generating or having an intent to generate a social and/or environmental impact alongside financial returns. And so that's really about how are you having a positive impact on communities. And I think we can't forget that in our messaging, but also in the evidence base that we've created over decades around how we create that impact. So there's no one at the mic. Okay, I see some people going now. I was going to say I can take the first question from, okay, I'll take the first, oh, there's someone at the mic now. So I'll take the first question from the floor. Is that Julie?
Hey. Hi, Lisa, welcome back. Really good to have you back. Julie Eads, New Hampshire Community Loan Fund. I'd love it if you would comment on that. It seems like one of the problems of getting money to flow is these gatekeepers. You have some totally awesome impact investor, brokerage firms that have just done great, for us. But most of the money is managed by, investment houses that just, they're not even looking for cheap, easy, because they just don't even want to look at it. It just doesn't fit in with what they're trying to do, and they're very dismissive of it. So I just love whatever you think about, what is pathways. Do you have to go around them? How do you go through them? How do you enlist them? What are your thoughts?
Yeah. Kat, do you want to take that?
Sure. I think it's an excellent point. And it's interesting, when we did our first beta test of CNote, we were going straight for retail customers, right, direct to consumer, and yet wealth advisors were calling us. And it's because there's clearly appetite. But what we learned in that is absolutely there are those hurdles, bureaucratic hurdles. And I think there's a couple ways we've learned around those. One, I think platforms like Impact Us is a true opportunity for this industry in terms of really making it easy for RIAs and other wealth advisors, to do this. I think secondly, having that voice at the table, right? So my learning was, if I just match-made our CDFI partners at CNote with the wealth advisor, it wouldn't have worked. Because what they were looking for and what the CDFI was looking for, it almost sounded like two ships passing in the night. And so our ability to serve as an intermediary and really understand both ended up being a critical point to actually match-make and get those dollars flowing. So I think having that intermediary, so you're not spending all of your time trying to knock down those doors, is a true critical advantage, and I think we're seeing more players come about to recognize that and say, why pull you from the great work you're doing and expect you to knock on all those doors at the same time? Let's see if we can bring in more innovative intermediaries to help do some of that knocking down for you. So that's one of the trends I've seen that I think is hopefully promising.
Yeah. I think this is also where OFN has a tremendous opportunity, right? When CDA at the Futures came out, there were questions about where the opportunity. To me, after this conference, it could be opportunity, how do you really reposition that? There are not a lot of other industries that have the power and heft of a network like OFN, who can go out there and speak and knock on some of those doors, right? I think that you have to recognize that when many times there is some ignorance, but it's not necessarily always intentional, having spoke to many of those. They just don't know, and what they need to manage are their transaction costs, the optics. If somebody's never heard of you, it's kind of hard to throw you into the portfolio mix. And I think that's where the beauty of collaboration and creativity, and how does OFN really start a campaign that says we are proactively moving into this space and be able to tout the examples. I think when I was running Tides, we placed a lot of donor advised funds and impact investing tools, but it was often because it took a lot of time for us to describe it. And the key was to start with, what is the issue trying to solve? Right, and I think that too often investment bankers who are pressed for time, they allow form to drive the function, right? They just say, well, let me just get it out through a CD, or let me just make a quick venture capital or private equity investment, as opposed to saying, what is the function we're trying to accomplish, and what is the best form? And I think the challenge and opportunity is, how do we position CDFI as a phenomenal vehicle to help do that? The other thing I would say is to figure out, how do you really promote your strengths? This is one of the few industries, and I guess I have to give the disclaimer that I'm on the board of ARIS, but you have, right, a baseline of rigor, which a lot of other people don't have. And so I would imagine, and I don't want to speak for Cynthia, but when we work through a different hat with large place-based foundations in regional areas, they want to know who's got the results. And so thinking about, again, playing to your strengths, and I think a lot of people don't know about that. They now know what's happening with S&P, but they don't know that this is an industry that has been very focused on its own self-evaluation, high level of transparency, and an entire database that can say, here's how you can begin to evaluate us individually, but also see the successful historical track record that we have. We are worthy of at least a conversation, if not in the end, an ultimate investment.
Yeah, and I would add, just practically speaking, that sometimes you have to think about going around gatekeepers, because ultimately the gatekeepers are going to be responsive to what their clients want, right? And my guess is that every single CDFI in this room has at least one high net worth individual investor who has supported their organization either through grants or through investments. And in Europe, what I've observed is people who are doing those types of investments get together. There are existing networks and platforms. There's an organization called Put Your Money Where Your Meaning Is. They actually used to be called Put Your Money Where Your Mouth Is, but then they started having bankers as members, so they had to change it. But you know, that organization brings together high net worth individuals. It brings together family foundations to talk about impact investing and to present deal opportunities. There's a platform called Tonic, which actually has a bunch of US members, but doesn't do much in investing in CDFIs. I think that part of that C around creativity is going around the gatekeepers. So we'll take one more question from the floor, and then I have a question from online.
Hi, my name is Seal Prinster. I'm president and CEO of Colorado Enterprise Fund. And my question is a little bit about the balance between, and I think it's a little bit about messaging. I think it's also about product, if you will. But the balance between the social and environmental and whatever kind of impact return and the financial return. And we've had a lot of conversations in Colorado, in Boulder, and Denver, and recently we had a 3-day impact investing conference, and it was really to draw out the family offices, the wealth advisors, and the local foundations to try and get them to embrace this concept of impact investing. And I think most people think about it in terms of the bigger return of private equity or venture capital, and don't really understand, which I know ARIS is trying to promote, that CDFIs represent more of a fixed income option for investing locally in their communities. So how do we get that message out about more of a portfolio approach of what CDFIs would really be looking for as far as the kind of investment that we would want that would be comparative to the other types of investing that we currently have from our large bank institutional investors. Whereas at the same time, we want to get those local investors or those kind of innovative, maybe national or regional types of investors. So it's a messaging, but it's also how to promote what the product offering is from our standpoint as an investee.
So that actually is very similar to one of the questions online, which was about how do we balance unrealistic demands for ROI from the newer impact investor field. And so, Cynthia, I'm going to ask you to take a go at that.
Well, I think it's a couple of approaches. What seems to be shaking out now by state and by region, there seem to be these kind of organically driven coalitions of family foundations and family offices and institutional foundations in the city who are really starting to embrace impact investing strategy and trying to figure out how they use impact investing to address whatever they're trying to address for their community. So for instance, Kellogg and Kresge and others have been really focused in the state of Michigan, and the Council on Michigan Foundations has led an effort to engage a lot of the family foundations within the state to identify where there are capital needs and how and what resources they have in place and what resources will they need to invest to grow the ecosystem within that region. And so there's a lot of great work that's going into that, and that includes CDFIs. CDFIs are on, we have a few national CDFIs that have been partners there, and then also helping to bring up and build the capacity of the local CDFIs. I think those are great vehicles when you're talking about you know, kind of plugging in and really getting a sense of what the challenges are in your specific area or geographic area and maybe even issue area. At a national level, there's a lot of funders and investors are coming together around specific sectors. So for instance, there's a food group right now that's been meeting, and I think we'll be sharing some interesting next steps in the spring. There's certainly groups around education and healthcare. And so I think the Mission Investors Exchange, the GIN certainly, and others are really starting to be hubs for those conversations and helping to facilitate conversations, especially if you are a CDFI that is interested or is wanting to partner creating those connectivity or creating that connectivity to those players. Additionally, I think with the platforms like CNote and Impact Us and others that are coming online, I think they are also going to be a great channel partner to help facilitate and create more awareness about different products that are out there. And I think that OFN, too, can play a really critical role in helping to facilitate these conversations, helping you all to figure out what your story is, what capacity you need to build in-house to engage with these types of investors. Some of you already have this, and this is a matter of kind of reshifting priorities, but I think that helping to build these best practices will better position you to have these more substantive conversations.
And you know, I also want to be honest in about the return challenge. The seal makes a really strong point about many impact investors are looking for market rate, quote, market rate returns, although I'm always challenged to understand what a risk-adjusted market rate return is when many private equity funds are, you know, not delivering any returns. But this question of return, I think, is partly a messaging point, and talking about financial performance around all of its characteristics. I think that both impact investors and the CDFI sector tend to talk about financial performance as one thing, as a return number, as a ROI. But what are the risk characteristics? What's the need for liquidity? You know, the fact that many of the instruments in the CDFI sector are self-amortizing, you guys actually pay down debt versus having a big balloon in the form of an exit having to happen on an equity investment, that's hugely appealing to many investors who are looking to mitigate risk, and a self-amortizing product is very helpful in that regard. So I think we need to move beyond just talking about ROI and what are the characteristics of the investments that we're offering to the impact investing community. Okay, was there a question? I saw somebody stand up and then. There's a whole line of okay, go ahead. Okay,
great. So what I'm thinking about, I'm sorry, I'm Jess Andors from Lawrence Community Works and Mill Cities Community Investments, which is a CDFI in Lawrence, Mass. And I'm thinking about the fact that in a lot of cases, debt is not necessarily the answer, it's not the only answer, right? And so to what extent are some of these impact investors or these other vehicles open to the idea that if they can pair debt with grant funding up front, or think of debt as a second step, a second stage in a process, that they're actually going to contribute to the long-term success of a project, right? Like, we have worked on what I would call speculative commercial real estate in a weak market city in northeastern Massachusetts, right? And what has been really helpful is to have grant funding to support staff capacity around marketing and outreach and project management, and that is going to help the debt perform eventually. But these things have to be paired together, and I'm wondering to what extent these newer investors or the field sort of can understand or embrace that.
So Melissa, I'm going to ask you to take this one, but your comments remind me of the great piece called Priming the Pump that Omidyar Network published, which is, it's dated now, but I think it still stands as a great report around this exact issue of how subsidy or grant funding can prime the pump for investment down the road. But Melissa?
So I just piggybacking on priming the pump, I think one other resource to take advantage of are your local universities. MacArthur Foundation did a great job of engaging what they call pracademics. So those of us who've been in the practical world and now are academics, to figure out how we can actually expand the research that looks at this, because I think Lisa in her role has certainly invested in significant research, but we know that when you get into the investment banks, they need something to show their clients. And so when you're able to leverage that research, and again, you all have the track record, the history, and the data, that's a phenomenal thing to be able to move forward. So I would think about how do you also find unlikely suspects to help share and change the narrative about CDFIs. I think within the foundation world, and I will say that I have a business partner, we actually work with many place-based foundations to look at making program-related investments or equity investments. And I can say, for better or for worse, they have not made a single program-related investment or equity investment without pairing it with grant dollars. Because they recognize, one, the only way they can preserve their long-term return is to make sure the capacity exists. And sometimes they realize they themselves don't have the capacity. This is a little embarrassing for them, so I won't say their name, but they went all the way through the process and then realized they didn't even know how to receive repayment of the debt because they're a foundation. So I think you have to realize, again, be mindful of who you're partnering with. I think that foundations are very clear. Many of them are failing to meet their 5% payout. And so it's extremely important to, again, think about how do you position. But I think, again, when most of them are struggling to get money out the door, they're recognizing their transaction cost for a program-related investment is almost 3 times what it costs to make a grant. If you can allow them to make one transaction with a series of capital stacks that have an ultimate financial performance that exceeds it sitting in a CD and certainly sitting somewhere else where there's no rate of return, then I think you have a very compelling case. But I think the key that I think all of us have said implicitly is you've got to find the right partner. We cannot paint impact investors as a homogenous group because they are not. And so you have to be really mindful of who are the right people for you to partner with that have the level of risk tolerance but also the flexible capital to be able to do that. But I'm happy to talk offline and say there are tons of folks who are thinking about how can I move large amounts of money without increasing my transaction costs that ultimately helps my board, which is oftentimes comprised of family members, to understand that this is what it can look like in 7 to 10 years, as opposed to a private equity venture fund where all they see is fees going out the door on a regular basis.
Another question?
Hi. Since I'm a journalist here, I'm going to report a little bit and then I'll ask a question. First of all, who was at SOCAP last month or knows what it is? There were a lot of CDFIs there. I saw Capital Impact Partners was there, New Resource Bank was there, and there were also 2 CDFI sessions there. Community Housing Capital and Community Development Trust had one on affordable housing. Craft 3, Growth Opportunity Partners, and I'm blanking out on the last one. Oh, Pacific Community Ventures had one on quality jobs. Both of those at SOCAP, which is the largest global gathering of impact investors in the world. It's going on about a decade now. It's massive. Both of those sessions were packed wall to wall. They're standing room only both. So there's definitely interest there. And so I know some of you know that, and others, I just want to help keep that momentum going. The impact investor crowd definitely wants a piece of this action, and they are interested in it, and they have lots of questions too. One of the impact investors at SOCAP it's actually a collective of high net worth millennials called Regenerative Finance. And they are very interested in using and or deploying their family wealth in ways that are, would be restorative in terms of racial justice. So I wanted to ask, given where a lot of foundation capital comes from, given where a lot of family wealth comes from, what are some of the risks and opportunities in pushing hard on racial justice as a way of framing impact investment?
So I'm going to ask Kat to actually respond to that, and then I'm watching our time. We're going to have to end with closing statements after this response, and if you want to also respond to that question in your closing statement, feel free.
Sure. No, I actually know Kate in regenerative finance quite well, and we think there's a tremendous opportunity. That's a great example of a group that came to CNote as well and said, we're interested, what are you doing? That I think we're seeing new players come about, and so I do think it's an incredible time for CDFIs to really share the story and the message and be a huge player. I think in terms of telling this story, at least from a CNote perspective, we always talk about high potential underserved communities first. Right? Really going straight to the borrower, straight to the individuals who are affecting, and what kind of transformative finance this really is, and juxtaposing that with their options, right? Which are often online predatory options, right? And oftentimes crushing rates. So for us, we tell a very specific story about the types of communities we work with and the types of borrowers we work with, and obviously the incredible CDFIs we work with. And then we leave those financial networks to use their voice. So for example, in regenerative finances, Kate is crafting that story, right? And that to her is her emotional appeal or what she feels drawn to about CDFI industry. I've worked with other investor groups actually who are very focused on women and love the fact that CDFIs have a commitment to women and many CDFIs have an incredible track record funding women entrepreneurs. I've worked with others that are very specific about geographies and love some of the specific urban success stories throughout CDFI. So I think where I come from is a place of know your audience, right? Tell the CDFI story because there are so many powerful statistics and stories to tell from a financial and impact performance perspective, but then really being cautious to allow that group, interpret its message as it needs to hit those investors. Because at the end of the day, I just want to see that capital, that strong capital and flexible capital flow into the hands of CDFIs.
So as you guys are reflecting on your final comments, I'm going to take moderator's privilege, and we're going to run over just a couple minutes. I promised to end us in 5 minutes. But as we were prepping for the panel, we realized that 3 of the 4 of us on the panel have quite a bit in common with Lori Chapman, the current chair of the OFN board. And I know what you guys are thinking. But we realized we all lived in Washington, D.C. for long parts of our career. And I do want to take a moment, actually, to acknowledge that this has been an extraordinary year for this organization, and that it has been led very ably and capably by Lori Chapman, who is the CEO at Enterprise Community Loan Fund. And can we give her a round of applause? So on that note, Cynthia, can you start to take us home?
Sure. So I think, my early career was started in a CDFI, and CDFIs are just, they set the tone for the rest of this impact investing space. You guys have track record, you have impact, you have a connectivity to community that a lot of groups don't. There are a lot of players coming out of this space that are feigning impact or looking for the next shiny thing. But you guys have been out there hitting the pavement, and it's a huge opportunity for you to better articulate your work. You're creating new partnerships with each other and new players in the space, and really take on this community and engage foundations and others to help to scale and really build the next stage of the growth of this field. And I, for one, I think the Kellogg Foundation, I'm allowed to say this, we are very committed to CDFIs. There's a lot of great work that you all are doing in the regions that we care about and the issue areas that we care about. And on this question on racial justice, that's a really critical component to our strategy moving forward, and something that a lens that we will be using on all of our investments, in fact, moving forward. So we are looking forward to continuing these conversations with you all, building on what you are seeing, what you're hearing, and really making sure that we're structuring investments that can actually be deployed, that can actually generate the type of impact, and also learning from them. There are going to be mistakes, and I think we have to acknowledge that, but we also want to make sure that we're all clear that we're in on this together. And so I'm really excited for this next phase and look forward to partnering with many of you.
So I would say, as I sit here looking at the screen, I think this is a tipping point for CDFIs, right? This is either where you end your legacy or you begin the next version of what this can look like. And I think that one of the challenges that we have is that oftentimes as investors, we make a separation between fiduciary responsibility and moral obligation. And when you think about the shifting tides of demographics in this country, to me, if CDFIs own their strengths and their weaknesses, not all are culturally competent, not all understand their communities, not all are willing to be on the edge of technology, otherwise we wouldn't have some of these fintech companies coming along, taking advantage and literally getting customers that should be knocking down your door. This is really an opportunity where you have to redo business, right? Impact investors are not going to fall off the sky and come find you. But you do have to figure out how do you move from being an investor to an entrepreneur and an innovator and figure out what are your competitive advantages. I personally believe the lens of which most CDFIs should lead is around this ability to make a connection to community. But that also means that you have to figure out how do you also balance not just the financial return, but the social metrics, and not outputs, but outcomes. And I think everyone struggles with that. But I do believe that when you see amazing competition coming in, being significantly invested in by investment banks, who have high net worth clients who are saying, I want to get the money up, but I want to make a difference, you have to figure out how to make yourself present. And so I would argue that your competitive advantages are history, not legacy, because that implies you're almost over. It is talent, right? But also time spent in the trenches and being able to articulate that story. And I do believe it's saying that we have both the fiduciary responsibility but a moral responsibility in our communities that you all will never understand. And that to me is the benefit of particularly the regional and local CDFIs. To be able to say that most folks, and certainly coming out of the Obama administration, we are very clear that everything has gone local. The challenge, of course, is how do we find the capacity that already exists there? And so again, you all are fundamentally the right answer and the only answer to think about how do I distribute equity and equitable financing options. When you think about the issue of racial equality, it is not just, well, this is wonderful having, 3 people from DC, but also 3 black women, right? But it's not just changing the optics, it's changing the system. I too served under the first Clinton administration in the Treasury Department, right? And realizing the tremendous amount of structural racism that exists, particularly in the financial markets, you all, the beauty is you're in the mainstream. Now, how do you then bring your values to the mainstream, get off the margins and move to an area where you can stand up and say, there are other ways to do ethical banking. There are ways to have banking with values. And those conversations should not be led just by high net worth individuals who get to decide where their money goes. It should be led by people who are in the community who can actually tell you where it goes and how it can be most effective. So I have high hopes, and I hope that whatever the conference is next year, there is also a time and a statement around how much money actually came, but not just how it came, what you were able to do with it. Because I guarantee you, if you were able to talk about the cumulative results of your work locally and what you can do based on transaction costs, there should not be a single impact investor that is not knocking down your door to say, this is the way to go when I'm truly talking about racial equity and community reform.
So Kat, I'm going to give you the last word, but I have to because Melissa talked about impact.
I called you out.
She called me out. Anthos, along with our partner Bridges Ventures, is launching a new report today called More Than Measurement. And it's all about impact, connection to community. Yep. How do you set objectives, be clear about them to attract investment partners? And if you're interested to learn more, come to the 4:15 session, where we're going to be talking about more than measurement and impact management holistically with myself and Clara Barbie and Craig Regal from Nonprofit Finance Fund. So Kat, you get the last word.
No pressure, no pressure. Thanks. All I'll say is behind your backs, I call CDFIs the unsung heroes of finance. I think it is the absolute best story and success story out there. And I think everyone in this room is tired of being America's best kept secret, right? You've worked way too hard with way too many results to continue to be flying under the radar. And so I think that is our challenge, all of our challenge who sit here passionate about this industry, is to really get us above the frame and out there visible, creating awareness, not just to that small private family foundation, but frankly across the country. And that's really where I feel passionate about. I want millennials, I want women, I want this huge wealth transfer that's about to happen to be cognizant of this incredible industry and their opportunity to consciously move their dollars and invest, whether through fixed incomes, savings, or other instruments, into this industry. So I think we are at the precipice of an opportunity to move not just from what we considered the high net worth, impact investing audience that we've always been so voraciously targeting, to a much larger audience of both accredited and unaccredited investors who are prepared to invest with their conscience. That's the opportunity in front of us, and I'd love to come back next year and have all of us celebrate that we've moved the needle.
Thank you.